Hey, welcome back to Stock Talk with Erik Anthony. Happy Thursday. I hope your Thursday is going well, even with all the red that we've seen in the market today. Jeez, bloodbath, just brutal. Start out today with the Fed coming out with Bullard, just basically, I don't think he said one good thing today that really helped the market in any capacity. Even when he said the words, I don't think recession's a big deal. Just when you're using the hard R word, I think the market reacted exactly how you would think it would react when someone says that from the Fed. Another thing that happened that I think that has also influenced the market today would be everything going on with Ukraine and Russia, which shouldn't be a surprise. We've been talking about that. Just because they say one thing doesn't mean they're going to do another. And right now it just seems like we're just playing a game of telephone with the Kremlin and our news outlets out here and trying to figure out who's telling the truth. So again, like I've been saying over the past couple days, don't be surprised if this just continues to last over a few weeks. One tidbit of news that no one's talking about is that the vid cases are extremely low, about 1/10 on a 7-day average from where they were in its peak, which is about 1.1 million cases. So it's crazy because you get that kind of news that has actually, ever since Omicron that variant came into play, I want to say just around the November time is when we started hearing about it. The market is kind of just taking a tumble. So you would think with that kind of positive news that we would try to maybe start seeing a little green. But it seems like that news now is just yesterday's news. And now all we want to talk about is World War III, Russia, and the end of the financial market as we know it. Again, like I will always say, just try your very best to try to block out all the noise, because right now it seems like we're just going to have this revolving news story with Russia and Ukraine for the foreseeable future. It doesn't seem like we want to pay any attention to good news. We just want to pay attention to what people will click. So as a long-term investor, keep that in mind. Try not to get too down on some of your positions and some of your plays that you've made, because right now, in my opinion, not financial advice, a lot of what we're seeing is just a lot of FUD-based decision making, and I think we are in a market that is risk off. And once we get back to a market that has actually a risk on market, if you keep continuing to build those positions, especially for your high growth long-term plays, I think you should be just fine. You should be more than fine. Okay, I just want to kind of keep going into it because last night was a long night. My baby is getting more teeth in, so around 3 a.m, he just woke up crying, and then my wife was up till about 4:30, and then I made him a bottle, gave it to her, and I thought they went back to sleep, so I went back to sleep, and then apparently she didn't come back to bed till around 4:30, and then he woke up pretty early in the morning around 7:30. So I was like, all right, I'll go, you sleep. And little dude had an okay morning, but just started screeching and just screaming. So as you can imagine, it was just a little tiring, more than usual. But his teething situation is almost like the market to me, because everything's fine one day, and then the next day, boom, just all hell breaks loose. And all I can remind myself when I see him screaming in that much pain, after we try to do what we can to subside all that pain, is we just kind of remember it will pass and things will get better. And that's just kind of my thought process on the market right now too. It will pass and things will get better. As I had said yesterday with earnings reports and how everything will be guidance based, and any little miss, even for companies that are profitable, will just be hammered. Even with somewhat good news but bad guidance, hammered. And then you have a miss, maybe a little bit of bad news, all bad. If you have a miss and some good guidance, it can still go down. So that brings me to Palantir. Palantir's earnings came out today. Woke up super early to try to read it, super tired, but there were a few things that popped out to me as a long-term investor. Again, I think when you hear these numbers, depending on what kind of investor you are, certain things will jump out to you. But to me specifically, what I enjoyed seeing was that the beats that they had regarding revenue and consumer growth was exactly what I was hoping to see, and actually it exceeded my expectations, which is, that's all I really care about. In regard to their miss, and it's like front page and on CNBC, and I think I saw it on Bloomberg too. There was like, Palantir misses. Well, how they missed? They missed on their earnings per share. They missed by 2 cents. And a lot of the miss came due to their involvements with their SPACs. But if you are a true long-term investor and you have any insight on who Palantir is, then you would know that they have their hand in about 14 SPACs, including Babylon Health, Wejo, Boxed, and Black Sky, just to name a few. They said it in their report too, that the 2 cent miss on the EPS had a lot to do with their unrealized gains. Well, if you know that they've invested so much into all these other companies, this shouldn't really be that big of a surprise to you. So, I mean, it really wasn't to me. Let me know in the comments below how you interpreted the earnings report, if you were able to listen to the conference call or check out the numbers. Another thing that stood out to me was Alex Karp's position on sales and how they're trying to grow their sales team. Right now, they have about 150 salesmen, and moving forward, they want to increase that over 200 more. What Alex Karp had mentioned, in 2022, they intend to adopt a hiring plan for their non-US commercial businesses that is similarly aggressive to the one that they've implemented for their US commercial business in 2021, including hiring sales representatives across France, Germany, Switzerland, Spain, Italy, and the Nordics, the United Kingdom, Benelux, the Middle East, South Korea, and elsewhere. They have expanded their partner ecosystem across the commercial business in 2021, including with IBM, Stern Stewart, Alex Partners, and Data Robot. They've launched Foundry for Builders and their strategic investment program to capture the opportunity for Foundry to be the developer platform for the next generation of companies in the United States and abroad. Just knowing that they're going to be expanding in all those countries is already something that I want to hear. One interesting thing was, it's not so much who they hire, but are they getting the value from who they hire? And I think that's really important, because they kind of get hit a lot on not having a huge sales team. But as he said in the call, the reason is because they have so much pride in their product that they don't feel that the salespeople are that necessary, that the product can sell itself. By the way, I'm going to leave a link below to the PowerPoint slide that I went through, as well as the roundup that I was reading. So again, just link the link below, and you can check it all out for yourself and see what parts that speak out to you, because that's what this is all about. Do your own due diligence. I just hope to be able to provide you some of my insight, what stands out to me, and like always, just give you the links and let you see what I see, and maybe it can just help provide you a little more insight and save you time from searching. Okay, so a big thing for me was their total revenue growth. It's at, just look at that. From 2019, they were at 743 million to now 1.5 billion. Their total revenue quarterly it just keeps increasing. Look at Q1 to Q2 to Q3 to Q4, up from 341 million to 433 million. Their overall commercial revenue growth accelerated each quarter in 2021, resulting in 47% year-over-year growth in the fourth quarter. Their commercial business generated more than 200 million in annual revenue, doubling for the second year in a row, as well as that their commercial net dollar retention was 150% in 2021, and they believe that the rapid U.S. commercial customer acquisition will only continue to drive U.S. commercial growth. You know, what's funny about this is that at their last earnings report, one of the main things that stood out to Wall Street was their lack of commercial business growth. And now one thing that seems to stand out to Wall Street is their lack of government growth. Again, there's so many nuances when it comes to what the market is looking for, but ultimately, if you have long-term goals with this company and you can see into the future the way they do, I think you should be fine as an investor, because remember, they're a company that's trying to solve a problem that you don't know that you are about to have or that you have currently. Well, and that's what they're planning on doing when it comes to their commercial growth, as they start digging deeper into their B2C sales. And again, why a company like Palantir has always stood out to me is not so much how they operate, but more so their areas of emphasis, specifically with AI and machine learning, automotive and mobility, which includes supply chain operations, cryptocurrency, data protection, and foundry for builders. More importantly, this company, like I've always said, they have no debt and they have 2.3 billion on hand, and they're ready for a black swan event. I always want to be in a company that is built for bad times, not a company that can only thrive during good times. I'm usually going to show you, the genomics sector, Mount Fang, chips, fintech, but I'll just save you all that time. It's all red. So there's really nothing to look at. Just a bad day in general. Specifically, I think, again, a lot of politically based FUD, and now you have the FUD from the Fed. These are those days that it's probably best to not look at the portfolio. But if you were looking, you would see specifically in the fintech space with one of my favorites, AFRM. AFRM was hit another 12% today. My God, this stock just keeps going down. And one thing I would like to bring to your attention, hopefully maybe something that some of you guys haven't caught up on, is that when stocks are going down, like I said before, out of the woodworks, you get all this hate, all the negativity. And just like we did today with the firm, a big story that came out today on Seeking Alpha, it says Amazon teams up with Barclays for installment payments in the United Kingdom. Customers in the United Kingdom will be able to use installments by Barclays. And that's what they're going to call this program, installments, to finance purchases of anything over $136 or more on amazon.co.uk starting today. This program will give customers options on terms between 3 and 48 months. What makes this a little bit different than, like a Klarna or a firm is that they're going to be charging interest from the jump. The unique thing about this story coming out today is that actually this story is not new. This story was actually told to the public back in December. But again, when things are going down, people just love to act like, oh, here's a new story. Did you guys, it might make you think, oh, there goes their contract with Amazon, because, a firm is here with Amazon that just started in November. That's not the case. I believe their contract is 3 years. I'll double check, but they just started that in November. And then in December, we found out that they're doing their thing with Barclays for United Kingdom. It's just, again, block out the noise and try to pay attention to what's really happening. Of course, that price action's down. There's the threat of recession every other day now. There's a threat of inflation every other day now. Just try to block out that noise and keep in mind why you invested in the company in the first place. But as a shareholder, it is hard to watch your favorite stock just get tumbled on. So my only suggestion, again, not financial advice, was just to always try to nibble on days like these. Never go too heavy, even when you think the stock can't go any lower, because guess what? It can go lower. And most likely it will go lower. So if you want to play by something, the moment you think that stock's not going to go any lower, be prepared for it to go lower another 15, 20, 30%. All right, hopping back into kind of some things I heard that I thought were pretty important for the market sentiment in general, is that Chuck Schumer said that the president will be addressing at the State of the Union address how we move past COVID. In case you're wondering, that will take place on March 1st. So that's always cool, just to kind of get an idea of how we move forward, not only as a country, but as an economy. And another thing, like I had told you guys yesterday, something to keep in mind is that Warren Buffett invested $1.5 billion into a penny stock, also known as Nubank, out of Brazil. Nubank shows his acknowledgement of the fintech sector's underlying theme, the digitization of financial services, as well as Buffett's willingness to associate with companies that are involved in the cryptocurrency sector. In detail, Easy Invest, a trading platform that Nubank acquired back in September of 2020, has been actively offering a Bitcoin exchange traded fund since June 2021, dubbed the QBTC11. The ETF is backed by QR Asset Management and is listed on the B3 stock exchange, the second oldest bourse in Brazil. Why I want to bring this to your attention is that, look, even Warren Buffett, and you already know how Charlie Munger feels about crypto. He basically just calls it a disease that none of us want to get. I don't think I need to say it, but I'll put it down right here. So you've always, I think at one time Warren Buffett called crypto rat poison or something like that. But if you're hesitant with crypto, and I was telling you yesterday, as you start seeing those commercials with crypto and EV, people are getting into these spaces. And what I like to do is just follow where the big money is going, not necessarily buy exactly what they're doing, but it's always beneficial to keep in mind where they're moving some of their money. Not only did he invest into Nubank out of Brazil with the crypto play, but he also got out of MasterCard and Visa. So again, I hope to touch on this a little bit more. At the time of this recording, as you can guess, all crypto also all down. But again, I think right now we're just in a very risk off market, and we are in a very volatile market because right now any news that can push this market down will do just that. I do hope that once we start moving forward and we get past this Russia-Ukraine thing, then we can really start seeing where this market can go. I don't know if you can hear, but I thought he'd still be asleep, but it sounds like he's waking up. So I have to go. And like always, thank you so much for checking in with Stock Talk with Erik Anthony, and I'll see you mañana.